And here we go, stock market, green, Bitcoin, green, as Jerome Powell and the Fed agree that it's time to pivot. Yes, the time has come for policy to adjust. Those were the very words that Jerome Powell delivered in his speech today at the Jackson Hole Symposium. This is a major turning point for financial markets, which have been waiting for a while now for Jerome Powell to decide to start cutting those very high interest rates, which are sitting at 5.25 to 5.5% on the Fed funds rate. This is now seeing risk rotate back on. Markets were, of course, expecting a September rate cut, and now the focus is going to be on how is this rate cut? Is it on time? Is it too late? Should we be getting a double rate cut? These are going to be the focuses for the market. We're going to progress now to see what are the Bitcoin charts. Don't forget to subscribe as always. If you like these types of videos, then make sure you check out the link in the description. So you can see Bitcoin here today is up, guys. We're up over 1.8% here. But more importantly, we're trying to win back our daily EMA ribbon. This is a very key level. We spoke about this yesterday's video, that we've got to get a higher high. We need to see us start working our way towards this resistance level, 63.5 to 64 range, and start working above it. Today, we've hit as high on today's candle, on the high today, is 62.3. This is really, really good. Remember, look at this candle here. This is the big recovery candle after the panic around the Japanese yen trade on the 8th of August. So on the 8th of August, we hit a high of 62.7. I want to see us notch above that. If we could notch above that today with the good news from Jerome Powell and the Jackson Hole Symposium, that would be really good, because that can start signaling that we've broken through the tough resistance here. Let me drop down to the 4-hourly chart and you can see exactly what I mean. This is that resistance cluster. If you take my cursor here and just draw a line like that with a ruler, you can see that's a bit of a resistance area. We want to see us break through this level and start working our way to this red zone. And then once we've returned to that red zone, we've got more work to do, right? It doesn't just stop there. Look at this big bull flag. This big bull flag needs to play out in the positive direction. This is what's going to give us our exciting bull market that everybody's waiting for. The breakout of this big bull flag will give you that 90,000, 100,000 Bitcoin, right? This is the move we want. We want this big pattern here to start working our way to the top, retest, and start going in this direction. That is what we want here on Bitcoin, up towards 90 and 100,000. But we've got a small, important battles first. Like I said, this red zone here, reclaim it. Start spending time at the top of the flag, and then get that breakout. Remember, up until now, we've shown a lot of weakness here in this consolidation, right? Lower highs, right? We kept struggling here, forming lower patterns, which made me cautious about this, and I even called for this pullback all the way back down to the bottom of the bull flag. Perfect pullback, nice touch base here, good opportunity to buy the dip, and now I'm quite bullish long here. If you're following me in the Telegram community, our free Telegram community, by the way, not the paid one, there's a free Telegram community. Get inside there. The link will be in the description, because I drop a lot of alpha, a lot of chart patterns, a lot of data. For example, 63%, over 63% of Binance's top traders are currently positioned long in this market. This shows that some of the more experienced traders are seeing something heading into Jackson Hole. And more importantly, now that we've got the policy update from Jerome Powell, they're starting to position long, right? And I think ultimately, like I've said for a little while now, I do not want to be out of this market. I certainly do not want to be out of this market when we've been through the hard bit, when you've seen that we've been through the steepest rate hiking cycle in a while, and now you can see we are weeks away from Jerome Powell cutting. 3 weeks, 5 days until the next FOMC meeting. This market has firmly priced in that we're getting at least one rate cut. And now, look at this. After Jackson Hole, 35%. This was 25% before. Now 35% of the market is pricing in Jerome Powell that may actually come out with a double rate cut. Now, I've shared my views in previous videos. I hope we don't get a double rate cut, because I think it could be a double-edged sword. I think if Jerome Powell comes out with a double rate cut, markets are going to be spooked. They're like, hey, Jerome Powell, you're behind the curve. That's the only reason you're doing this. You've thrown us into a recession. Something is dramatically wrong. That's why you're panicking to do a double rate cut. So for me, in my opinion, I think the best course of action, which is what I think Jerome Powell will do, unless the data's horrible, is go ahead, deliver one rate cut. If in the next one you want to do a double to get on the head of the curve, that's fine. Just deliver one. Don't spook this market right now. And so if we come back, let's look at some of the key messages that Jerome Powell shared. The first was this. The time has come for policy to adjust. Let's then take a look at what he says here. He goes on to say the direction of travel is clear and the timing and pace of rate cuts will depend on the incoming data, the evolving outlook, and the balance of risks. Inflation has declined significantly, the labor market is no longer overheated, and conditions are now less tight than those that prevailed before the pandemic. Supply constraints have normalized, and the balance of risk to our two mandates has changed. He vowed that we would do everything we can to make sure the labor market stays strong and progress on inflation continues. This is a good message. What else do you want from Jerome Powell? He's basically saying, look, I'm comfortable now. I'm getting nice and comfortable now that inflation is close there to the 2% target. I'm feeling good. Look at this. Our objective has been to restore price stability, i.e. 2% inflation, while maintaining the strong labor market, okay, and avoiding the sharp increases in unemployment. While the task is not complete, look at this bit here. While the task is not complete, we have made a good deal of progress towards that outcome. This is good, guys. This is what we want to hear. And look at this. Look at some of the sayings that people are saying thereafter, saying he's pretty dovish. He bought the option to do whatever he needs to do next month, which is clearly an ease. And that's good. That's all we wanted here. We didn't want him to come out hawkish. We didn't want him to tell the markets to calm down. You're too excited. He didn't come out like that. He didn't put us back in the box. He didn't rug pull us. And that's really good. We can now work towards a rate cut in the next 3 weeks, and that will allow risk to rotate on. Remember, we need this dollar index, this thing called the dollar index. We need this moving to the downside. And yesterday we spoke about this, and today's candle here has helped exactly that. It's playing out this scenario of breaking this support here and starting to work down. Remember, there's a little bit of support here, right? So if we were to put in that horizontal line there is some support there for the dollar index, which you'll want to watch out for. We need to be able to break through that green line there on the dollar index and start working this to the downside. The more time this spends here on the weekly chart to the downside, the better it's going to be for Bitcoin. Coming back onto Bitcoin then, what I do want to share with you guys is this weekly EMA ribbon. Look at this weekly EMA ribbon. A nice retest, and this week we're getting a good candle, a good bounce. But remember, a good bounce from the EMA ribbon is nothing without a higher high. We'll enjoy the next kind of couple of weeks. I expect us to go mountain attack, but look at these three peaks here. 1, 2, 3 consecutive lower highs. We need to break that pattern. I want to see us really start to make an effort in this bull flag to break this peak and break out of this bull flag. That's going to be the important part here if we want to see some of the exciting price action on Bitcoin and all the altcoins like I know so many of you want to. In the meantime, I continue to look for opportunities to DCA. I'm not chasing the green candles right now. I had some good opportunities during the dumps over the last kind of couple of days and weeks. But also, I'm actively trading. So I am trading altcoins. If you want to see which altcoins I'm trading, I'm getting 10, 15, 20% return on certain altcoin trades at a time. Spot trading. I only trade long. I don't use any leverage. I keep it nice and simple. If you want some insights into my strategy of how I trade and build up my cash base so that I'm ready to buy the dip, then make sure you're in our Telegram community, ijazcrypto.com/TG. So, another big Jackson Hole meeting in the books, another big Powell speech in the books, and it comes in our favor, guys. We've been through one of the steepest rate hiking cycles we've ever seen. For chances of you, if you guys are young or of middle age watching this video, you've been through one of the steepest rate hiking cycles. So props to you. You survived it. You know what it's about. You saw risk rotate off, and now we can start this period, whether it lasts a year, 2, 3 years, of risk rotating on, rates cutting, things getting easier, till eventually the Fed start printing again like they love to do, increasing their debt some more and ruining their fiat currency. That's what we're here for. Hopefully you enjoyed this video, guys. Don't forget to smash some likes. Don't forget to subscribe, and I'll see you in the next one.